So, guys, thank you all of you for coming, and welcome you to the second day of what we call to be the Flash Week. And as you know, we are going through a series of live streams, like the one today, like the one that we did yesterday, where we are going to show you how do we use those tools that we offer on a daily basis to increase our edge as a traders. Because don't forget that we are traders our own, and we use these tools for our trading. So yeah, we wanted to share you a bit, a few cents of our view, our uses of it, and to see if you can grab some value out of it. So today we are going with the market sentiment tool, and basically the market sentiment tool is a tool that was born because of a need to see an overall gauge of the market sentiment whenever we wanted to trade. Like in the past, what we used to do was to collect a lot of data, and when we wanted to track a bit how is the market sentiment going, we had to build manually some Excel sheets, some spreadsheets, where we plot the data on, and we saw like the market dynamics, the average changes, all of these things that we now provide on a easier interface and a faster way. And yeah, we are going to talk about this amazing tool that we look into every day before we start trading. So the market sentiment tool provides a comprehensive overview of the current state of the small cap market, like I told you. And however, to fully understand this tool, it's essential to grasp the nature of the small cap market itself. What I mean here, I'm meaning here that these stocks, as we understand and as we look the market like, they move in cycles. So for us, this is the reason why this is so important. And if you're asking, like, if I know you guys probably know and probably are experienced traders and stuff, but if you are asking why those cycles come and go, it's basically because the markets consist of participants taking long positions and other going short. Think of it as a battle. Like they are battling, they are fighting themselves, and eventually the price move in the path of less resistance. So when short sellers perform well, like they are gaining money and making money for a long period of time, they often become overconfident. They say, okay, I'm making money, I'm increasing my size, I want to get more money because I see my P&L going up, so I'm taking more size, and I'm also holding more because I feel like the market is giving, and my short positions are paying me a lot. So I will naturally let my positions run and be more confident. Let's say that the market uh, goes against you, you likely are going to go more like you are going to take more confidence on that. You are getting you are giving it more wiggle room to that, let's say stock that it's going on your counter, because you feel like the market sentiment is so bearish, and the 90% of the times that happens, that you let your stop move your stop a bit and stuff, the stocks come down and give you the the move that you were expecting. So that's not a thing that we do as experienced as a professional traders, but people do this because, as you know, the market is full of human nature, and people often get overconfident and do things that they should not be doing because of these kind of things. Then an outlier event occurs, shifting the market direction temporarily. This shift continues until euphoria subsides and short sellers gain confidence again. So as you know, if you have been trading small caps for a while, you know that often after a long period of time where faders come and go like every day, they are the stocks are fading and there are not a lot of outliers, a lot of runners. uh, you'll notice that a lot of times that happens comes a day where you see what we call a supernova, a stock that goes absolutely crazy. Let's say a stock that is gapping up an 80% and it's I don't know, priced above $2 and whatever. Let's say it's a cool setup for short sellers in a cool environment, so you know a lot of people is gonna be involved, but you don't know what can happen there, and it's completely random. It's what we call a black swan, and we call it also outlier event. It's when a stock goes parabolic and starts like eating all the short sellers that are involved, and that creates a shift in the market, a shift in the cycle, and you get a lot more action, a lot more volatility, and a lot more squeezers for a short period of time, and the long buyers regain confidence, and you get the repetition, like the opposite repetition of the very cycle. And when that cycle ends, it comes again, the short cycle, like the fader cycle, and it's like constantly like this. So this dynamic creates cycles in the market, alternating between dominance by short sellers and long traders. So we are constantly saying this kind of cycle, and we are constantly tracking how much this like dynamics last for, and we do it with our average change from open, that it's a tool that is inside our market sentiment tool. For me, it's my favorite. There are more tools that we are going to show you more about, but this specific tool is really good for tracking those kind of cycles. Using the average change from open feature, these cycles become easy to identify visually, and it allows traders to observe patterns in market behavior, giving a clear big picture understanding of the market sentiment and momentum. As you can see here, what I just told, it repeats constantly. You see, the short sellers are in control, even more confidence of the short sellers, more faders, even more confidence of short sellers, but they start reclaiming, and then boom, an outlier event, volatility. But it doesn't last long. Fade, fade, and boom, fade, fade, and less fade, and probably boom. So it it is constantly like this, and it always behaves like this, and as everything, you cannot predict how long it's gonna last, but you can say and you can like measure and know that it happens, and you actually can make some decisions on based on this kind of dynamics and patterns that you see here. So this is the end of this presentation, but now I'm going to walk through a bit on the actual tool that is here. So as I told you before, not only we have this, that is the average change from open, but we have other gauges and tools that allows us to track this kind of behavior. First of all, we have the gappers, that it's basically the amount of gappers over each month, week, or day. This is really good information about, like, you see many gappers, so you can take decisions based on that, or you see less gappers, you can assume the market is quiet. There, the volume, you can also switch between daily, monthly, and weekly, and the dollar volume, that it's also an important feature. Another thing here is that if you go to filters, you can select among those filters to see what kind of gappers you want to see. For example, in this case, I got 1 million volume at least, and a price of $1. But for example, let's say a price maximum of $1. because we have been saying a lot of runners and a lot of momentum um, in the sub-dollar market. As you see here, okay, what I just told you, um, downtrend, downtrend, quiet market with a bit of a reclaimish behavior, calm market, and then boom, an outlier. This day is not that big of a fader week. This week, sorry, not day. Um, you see more momentum here, more choppiness, and less faders, and then another time, and then boom again. So you can kind of track this and move with it. You see here June 24 fader, July 24 big faders, August 24 big faders, and then boom 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 boom, more choppy action because people get overconfident, and then the other side wins the game. So it happens every time. um, we are going to return this to, for example, $2, no, $1. Let's say $1, and let's say more volume, 15 million of volume. What are the stocks with 50 million? No, not 50, it's too much. With 20 million of volume doing on a daily basis with a gap value of, let's say, 50%, you can see good uh, a pretty good picture of what's going on. So let's say you focus only on those setups. You can have this set like this for it to show you that, and or you can switch it and make it like so basic like I have it, so you can take a quick look and see the overall picture. If you wanna have more filters and stuff with this kind of tool, you will go to the gap analysis tool, but it's something that we are going to show you in a couple days. So for now, let's stick to it. Now you will be wondering, what is this kind of rectangle here, this kind of weird thing? Okay, this is so cool. Take a look. You see those lines here separating the cubes? This line, this line. Okay, so these spaces are months, and the colored areas, the blue areas, are days in which the setup that you have here has occurred. So in this case, I have it set it up to show me when do I see gaps between 100 and 700% and a volume of above 1 million and a price above $1. So when I click apply, I will see how many days it it passed since the last gap of my choice. So in this case, I see there has been 5 days without a gap of these characteristics, you know. So this is another thing to see, like this month you are clearly not seeing as much action as this month. So if you tune it to your likes and to your needs, you can have a really good picture of the setups you're looking into in a more easy and straightforward way. So for example, let's say you like to see stocks that has more than 20 million and a gap of over 50%. You can see it here, you know, 0 days since the last one, and a pretty good row of them. And here you get what you see on here. Okay, one thing to note is that this window goes goes independent to the other windows. Okay, so the filters here are for this, and the filters here are for the rest of the tool. And in these little windows here, you can see the last ticker, in this case QMM, in this case VSTY, TE, sorry, my English, and the performance basically. So This is everything. This is the gap, the market sentiment tool, and it's a really useful tool to have a clear picture of the market sentiment. Do you guys do you guys have any questions about it? You think it's worth it? You think it's useful? Tell me your thoughts. Nacho, ¿será posible subir un poco el volumen? Oh, I didn't hear you. He's telling me to pull up the volume. I guess you hear me right, guys.
No, your volume was good on
Okay,
my
okay,
side.
okay. Do you have any doubts, man? This is basically the first thing I look into every day that I get into the stock market. When I open my PC, this is the first window I look into. Do you guys have any questions about it? You can play a lot with it. As you see, you can put here everything you want. Let's say what of the stocks over $7 do over the last days with a 50% gap, for example, and you see how they behave. It's pretty useful. Any questions? I see no questions.
Guys, we want to make this interactive, so feel free to ask if you have your own methods of doing the market sentiment. Let us know where any questions that you have. This market sentiment is very important. Um, uh, yeah, so don't hesitate if you have questions or any concerns, any thoughts on it, or if anything is missing, confusing.
I guess I did a really good explanation then. This tool
Yes.
is actually very brief. The following tools are going to be a lot more complex, and you will see more in depth those because there are a lot more options. This one is like the most simple thing and the most straightforward to have a quick snapshot of the market. What do you use the volume and dollar volume sentiment here? What do you use the volume and dollar volume sentiment here? Okay, this is for me important because based on the volume, on dollar volume, I can see how much action is the market getting lately. So one thing I look into is, okay, I'm seeing an uptrend on gappers, but I'm also seeing a downtrend in volume. So maybe I got um, more opportunities that are less profitable for me, for myself, because on my particular style, I need volume. So understanding these kind of things makes me think about my sizing, makes me think about, okay, I'm saying this trend, so I'm not gonna be that aggressive, and if I see something out of the norm, I will go harder. So yeah, that's one use, and other uses are up to you. Like every trader has its own like methods and ways to do it. Also, the dollar volume allows me to see the same, but in dollars, not on shares. So it's pretty useful too. Can we
Not
speak?
to check your inbox.
Can we speak, or we have to write the questions here? Yeah, you can speak for sure.
Yeah, 100%. You guys are welcome to come on voice.
Okay, Masud checking.
Can you hear me now?
Yeah, we hear you.
Okay, my English isn't good, so I'm sorry for that.
No problem.
Yeah, when let's say that I'm building a strategy, right? So
Hmm.
the volume is one of the main things that we look into when we want to build a strategy, right?
Hmm.
Yeah.
But that volume changed. Let's say that at 8 a.m. we have 2 million, but at 9 a.m. we can have 4 million, right? So if we have a strategy for a 2 million volume, What happened then after? Let's say I press the button and I sell because that's fit with my criteria for that specific strategy, right? But 2 hours later or 1 hour later, I have four or 3 or 5 millions. So what time is? I don't know how to manage that. I don't know if you understand what I'm saying right now.
I understand what you're saying, and I think you have found something in backtesting and algo around we called hindsight information. So I'm gonna be very blunt. You may have found that if you put lower volume at the higher, you get a really good fader. So volume is a hindsight tool. It is not something you should not have your strategy revolving around it. So to give you a perspective, just I'm only saying this not to brag or anything, but I've been trading for 14 years and I have a small little prop firm where the guys are super successful. So I think you shouldn't. I can confidently say your setup and variable is not sufficient if it just revolves around volume. You can go into variations such as volume projection as analysis, and then you have to have what speed, what portion did it meet. So volume forecasts in general public, there's two aspects. One of them is from pre-market multiplied by 10. The second one is regression line. I don't know if you guys know what that is. In summary, it's basically y equals mx plus b. You take all the data points and you calculate every 5 minutes, every 15 minutes what the volume should be and what pace is it at. So by that metric, after 9:30, 9:45, you can kind of get a range of where the volume will end. And then to go a bit more nuanced to that, you can see what the volume should have been at 9:55, or the volume based on the regression line, and you can see what the current volume is. That kind of gives you an indication of supply and demand. That's a long-winded answer, but let me know if that's useful, if I understood your question correctly. And by the way, you guys don't leave. I wanna give another perspective on market sentiment. I think there's another very useful aspect to look at this. So the prop firm that I run.
Feel free to share your screen.
Okay, if you want me to, yeah, sure. So guys, don't leave. I want to share an interesting perspective where traders have to have made $1 million profit in order to be considered to join, and there's only 6, 7 guys at the moment, and vast majority of them make like mid 6 figures a month at the moment. 3 of them, 3 of them. So that being said, we look at market sentiment in a bit of a different way because we run into liquidity issues. I'm happy to go over that, but first I want to make sure that I address the question that was asked. Who asked the question? Shagrath, right? Not sure you could hear me?
Yeah.
Shagrath asked the question, right?
Yeah, I think so.
Yeah.
Okay.
I'm sorry. Is that I don't have I'm switching to phone so I can speak. Yes, I understand your answer. I think it's very good. I would definitely do that. You know.
Okay, yeah, try not to use variable volume by itself as a variable. It is something very good to look at, but yeah, there's also a really cool aspect. It's called I call it supply and demand. So what we look at is we look at if hypothetically you were looking at short from a fundamental point of view, you take a look at, let's say if they need to dump 10 million shares, the volume projection needs to be, if it's usually 10-to-1 ratio. So if the volume is 100 mil, then you know it's still going to fade. Because a market maker, for them to dump 10 million shares, they need about 100 mil on average. And the way to determine that is actually going back and taking a look at companies that do dumping. Which companies do dumping? There's underwriters, which is AC Wainwright, Maximum, and all these guys, and then there's the guys that participate in the offering, who are Armistice, Savvy Management, Anson Fund, these companies. So those are the guys that often, when an offering happens, they put they show in the filings that they participated, so they have skin in the game. So you can basically, if you really dig into the filings, you could reverse engineer and see that the ratio is 10 to 1. If no other questions, I want to show you guys a perspective of how we take a look if there's anybody that has running into liquidity issues. Anybody have any other questions before we jump?
All good
You
for
guys
now.
can chat. Okay, awesome. You guys can also type questions. Me and Nacho will quickly go take a look. So market sentiment, one thing we take a look at, by the way, Nacho did a freaking phenomenal job, amazing. It's beautiful. We take a look at, we try to put, so in small cap, if liquidity volume becomes an issue, but also at a level where you are performing at a higher level, you also have to pay attention to nuanced details and perspectives like that. So we actually increase our risk as we get a shift. So an example in here, historically we have went back for multiple years, and we see very often, if you have 3 months of consistently faders for the month, then you know the odds are it's going to be tougher ahead. So market goes in sentiment waves. And what is my perspective of why it goes in sentiment waves is because the guys that actually do the offering, why do these gap and crap work? It is a bit known in the fundamental world that it is because Anson Fund, Savvy Management, Anson Fund manages $2 billion. Imagine a company has $2 billion, and you can look at, you could Google it. Here, we could look at this. Nobody record this. I'm not trying to get sued. So Anson Fund asset under management. Asset under management. So it says 1 billion, but I thought it was 2 billion or recently 2 billion. So this company participate a lot in offerings. So if they have $1 billion, they have to, it can't always be short. So they have to go through cycles. So it's these guys, and then you have Armistice. So this guy, this company is the other one that has $6 billion. Now, when you go into their filings, you will see that they have big cap and small cap and all that jazz. But that's just in my opinion, it is in order to make sure that you can't have money sitting still, because there's a opportunity cost of 8%. But if you look at all the offerings, all of the warrants holders, and these guys they have warrants at 25 cents, and then you could see that because they have to disclose where they sold it, you see they sold it for like $6, $7. So the point being, market cycle, in my opinion, it goes because of these guys. They're fighting each other, and also it can't always be fader, so it's up and down. Now, how do you capitalize on improving your performance just a little bit? I wouldn't recommend this, but it is something that we put on a bit more risk because we anticipate range. In stock market, whenever you can anticipate range and accuracy, you're golden. So what we take a look at is this variable here. If you look at December, you had a very tough month. So this is the open price, and it goes higher. When something like this happens, the month after, so whenever these are all, in our opinion, like they are bullish cycles, so people are okay, long, buy. And then what happens in the month after is people are still long and bullish because they've made money in here. So now you have a bigger anticipated range than this. Look at all the other months, right? The range is not there as much. So when this happens, what we try and do is we try and put more risk because we know the market is hot. If you have a day where you have 2-3 runners that are running 500%, 1000% in one day, it's kind of, you could tell that the chart in here on average is going to be that it's a bit bullish. So the reason why you have this bigger range expansion is because long is involved. And now then you have these tougher days months. So you have 1 month good month, 2 month good month, and third month you see things are reclaiming above the open price. Open price is an important variable too, you guys should keep in mind. So this is very tough. And then when it pushes here, the month after, this is not a clear indication, but if you had another one gap up like this, like, then you could put on short. So this is where there's some people that short the open and then they get stopped out. So this is not exactly 2%. It's different. Usually pushes to 20, 30, depending on the stock gap. So in here you still have good range. So this is an easier one to tell. So whenever you have basically tough months like this, in here, what we try and do is we try and put more risk because we anticipate a bigger range. So look at this. This is by default purpose. If you show to anybody, August was a tough month. So it's a tough month. You stay dry. You stay composed. You use. I don't want to jump the gun, but if you use the back test, you could take a look at how you would have performed versus how would your strategies have performed. So then it removes the psychological aspect. So an example, Nacho, can I show that or no?
You mean the backtesting tool? Yeah, go on.
Okay.
And show too much.
No, okay, no too much. Just one quick little thing. So in here, this is what I want to show you guys. Look at this. So there are times that this is your system. So let's say you have 5 setups, right? One of your setups, you see that you read this month. This tool is very, very valuable and useful in conjunction because you have to stay dry. Like what that means is you took a loss, it's okay to take a loss because your system strategy for this setup was read. So what I'm trying to say here, connecting it to here, so this is probably the month, hypothetically, if you're an evil short seller. I joke with my friends about being evil short seller. So this is the month that you're red and your system is red. It's okay. Don't have emotions. Knowing this tool that this is your system that's wrong, it's not you, you shouldn't go on rage. You shouldn't open up your daily max. I hope everybody has a daily max loss. I strongly encourage it. But you shouldn't open your daily max loss. You shouldn't go bananas. You shouldn't revenge trade. Because what happens is, if you're a beginner trader, you will always notice whenever you blow up your account, a few days after the trade works. And you always hate yourself and you're like, man, if I had only stayed longer, if I did this. And because it's normal. So these months, take your losses, continue, because look at the range fade and look at the fade month here after. So, market sentiment tool. And then again, also it's based on variable. So let's say you only are trading stocks that is a 50% or 60% gapper and above $1. So we, in the prop firm, we actually differentiate between sub-dollar, above dollar, because that's how traders think. But you can see August was tough. So you can alter this to what you see fit. Because there are people that do runners and they only short 20%. There are people that short the first 1 hour and they only short 60%, 70% gapper and they leave. Now I want to show you this. So visualize this in your mind, guys. Look at this and check this out. So this is a neat little thing that I shouldn't fully mention because there is some liquidity issues and constraints. But look at the big difference, how much it varies. So the thing here, if you were to go and be in the algo world, there's a thing called, basically it means not related edges. You don't always want to have setups and edges and trades that are very linear with the other. So indirectly what I'm saying is things are unconnected. What did you guys see in August? In August, you see that it was a tough month above $1, right? Look at sub dollar. This is a very neat little hack. So sub dollar, so the guys in the prop firm, the guys that are doing well, they shift their focus. This is one of their things. They look at it different. So you can do that yourself. You can segment it. This is one way of looking at it. You can segment it by that. You can segment it by percent. 20% or more shows you midday runners too. Yeah, and then looking at in here, week is useful as well, just so you could get a see that this week here it went a bit higher. So it's been a bit of a tougher week, and even starting this week 46, so 3 weeks, November. If you were to run a back test hypothetically on open print strategy, which is short the open, put like 25%, you will notice it's been a bit tougher. It's a bit of red days. That's another way to look at market sentiments as well. I blurred out a lot of information, so I hope you guys are. I encourage you guys to ask questions. Hey Valhalla, how you doing, brother? I encourage you guys to ask questions, and don't hesitate. Whatever question you have, feel free to ask it. Can you speak? Oh, okay, that's a different one. Do you guys see this?
How you doing, brother? There's a big man.
So you guys can write your questions in here if you see my screen. So the way to get to here is clicking open chat, and then feel free to ask questions in here. I encourage you guys to participate. I want you guys, the best way to learn is to actually ask questions. And whatever questions you have, very likely other people have the exact same question. And I also have to go in like 5 minutes, just a heads up. So don't hesitate to ask, brothers and sisters, if there's any girls. Do you think that varies and is important to the percent? Do you think that it varies and it is important based on percent of the gap? For instance, the difference between 50 and 100. I think this is just my perspective. I think not so much. You definitely you get a bigger profit factor on conviction. So if you're backtesting a strategy, what are the key variables? Most people overlook the number of count. You want to what is a profit factor? Profit factor is a composition of average gain per trade. So it's not much big variance between 50 to 100%, but the higher up you go, the bigger your profit factor is, but you get less trades. So if you are a beginner trader and trying to improve your trading, I would encourage you to be at 70%. By the way, somebody else will hear this and they would be like, it's bad advice, whatever, because it's just, you can make money in all aspects. But percent gaps don't mean as much. But if you go into the 30-40%, the biggest mistake that a lot of people make is they don't give it enough. They don't give it 10%. So you can have an edge in 40% stock, gap up 30%. If your slippage, cost of commission is nothing. It just has not a lot to go, right? So if it's a 30-40% stock, they can go against you. You can make money. But if you account for commissions, locates, then the edge profit factor is lower. Guys, the rest of you, please ask questions as well. I encourage you guys. This is a good moment to learn, and whatever questions you have, other people have the same thing. Don't hesitate to ask. How do you know that those curves are reliable? Is there any way to see the charts that compose them, the tool? That's a very good question, JP Chen. So those curves are reliable because they're on data points. In order for you to see what they are, you can go to gap analysis tool and you could take a look. You could use a back tester. So an example, it's a very, very good question. And I encourage you guys to question and ask anything that you don't know. So if you put a variable in gap analysis, 20 to 4,500%, minimum one, this, you can see all the charts. And then you can see the average chart and things like that. These are reliable because they're based on data points. It's not based on what somebody thinks. Another variable that if you want, you can also, gap analysis would have it. But 100% they're reliable. They're not made up. And feel free to ask further questions, JP Chen. I want you to solidify and not have fear. Is there any way to see the charts that compose them? Gap analysis. Can you summarize which variables are the most important to when creating a strategy? Shagrath, variables for me, it kind of depends on the objective. I'm going to assume you want the best quality setup trades. And there's multiple ways to skin a cat. So one way, overall objective, you want to find a stock where it has range. So find what are the variables that has range. So what can you summarize variables? So I think a bigger gap percent is important. Even though you cannot incorporate volume, I think volume is something to be very cognizant of. If you have volume forecast, anything above 150 mil volume is relatively tougher if you look at it statistically. So you can't use that in the back test, but not yet. So gap, volume, and how simple your thing is. I think very often people have a lot of variables and very secluded. Run it for a bigger time frame, run it over a 5-year period, 7-year period, see how it performs. Open price, VWAP, gap are the variables. Does that answer your question, Shagmarth? Let me know if it doesn't. Just tag me, say it again, I'll go over it. As I'm starting out, I don't ask and prefer to listen, but what I'm hearing is incredible. It opens your head into account of the variables relate to them to each other flash. Yeah, Pami. Again, it's don't go into the rabbit hole. Keep things very simple. The more simple they are, the higher the performance is. All the things that I mentioned about fundamentals and things like that, to be very blunt and honest with you, I don't think most people should go into it because it gives you a false confidence. I know traders, I know all the good fundamental traders, from Ricky Analog to Michael Good to Ozpex to all-day faders, everybody. And I know people that are not fundamental traders. So what I'm saying indirectly is the guys that are non-fundamental traders, the guys that are based on just strategies, ideas, their P&L from my experience is like 10 times bigger. I don't want to talk much into who does what, but try to keep things very simple. Most successful people, they have it very, very simple. Okay, Fabi, so the M cent can vary between different stock prices and gap value, and interesting to diversify your strategy. Market sentiment can vary between different stock prices and gap values. I think the big difference in gap value comes from 30 to 70%. That's when you will see a big difference. And often the other thing that I mentioned, above dollar, is generally not known. It is something like we take pride in, but also find things that you think are just completely different. You want to have, I don't want to mention, but if you get super far advanced, you want to have some strategies that are a bit opposite of the other. But overall, it's okay. Yes, you answered my questions. Okay. Can I ask where the data is pulled from? Very nice to go through and everything looking great and it's very useful. The data, we have a multiple source. We have end of the day market data, and then we have Polygon that we use. We have multiple data source, and we take pride in making sure our data is very good. And what that means is if you go take a look, things that have been delisted or reverse split adjusted, our data reflects that. So we take pride in our data, and we have multiple data source. Polygon and end of the market data, to answer that question.
How much importance do you give to daily charts in short setups compared to other conditions? Uh, in my case, I don't know, Masood, I will let him respond right now. In my case, I love to look at daily charts for looking to overhead resistance. I like to look for volume trading at the bigger price points, and that gives me a lot of edge for me in my specific case. When
100,
I see more volume
100,
at higher prices, I like to like I go bigger. That's for me. What do you think, Masood?
110%. I'm the same boat. Data. I didn't understand this till Lucas kept saying all of the setup needs to come from data, from daily chart, all of it. So data, daily chart is very important in terms of resistance. You can, for small cap, you can take a look at the past time that it ran and use the day that it had a very big volume. If it's going sideways and there's no volume, even though it shows resistance, I don't take that much into account. But if it's a day that there's a lot of volume because of bag holders concept, I incorporate that. But daily chart is where all the setup needs to come from. By the way, guys, I have a meeting at 5, but what I can do is I can be on the phone as I drive. Hopefully no accidents happen. How much importance with the gap? What preference do you have? Do you use pre-market? Can you gap percent at AM? For us, Shagrath, because we do bigger, we try not to trade pre-market. There's nothing wrong with trading pre-market. It just, for us, it establishes bad habits and there's not enough liquidity. But in my experience, I think you should, if you're a short seller and hold all day type of guy, try not to take positions before 9 a.m. in my opinion, because if you're a beginner trader, there's many times you will get caught during a headlight situation and you'll blow up the account, and auto liquidate doesn't trigger into pre-market. Based on market sentiment, do you recommend to adjust risk given the room to risk size down? Rec specs, I think you can if you're a very, very good trader, but very likely you need to adjust your risk based on it's called bank management. Very, very important. So if you have 3 red days, try to have a daily max lots that's equal to 3 average green days. So change your risk based on your P&L, not based on market sentiment. I think that's a way better variable than a market sentiment. So if you have 3 red daily max loss, you gotta reduce your risk. We reduce our risk by half or whatever we have to do to make sure the curve is smoother. Hey guys, so I'm gonna be driving, but feel free to ask questions. I'll answer.
Simple is good because there's less mental capital drain executing. For me, simple edges and some trade reading skills for those edges are better than complicated but high prefactor strategies. Figure did throw 2 cents and yeah, absolutely. I'm on the same boat as you. I prefer to go simple, and my strategies are pretty simple. Um, yeah, totally agree.
100%, I agree. Simple is the only way to go.
Do you think that you can be highly profitable short selling without level two. Yeah, absolutely. And conviction. I am executing some strategies, some systematic strategies that I built up with the Flash Research backtesting tool, and I could absolutely execute those strategies without the level two because they are all data driven and they don't rely on tape. Yeah, so absolutely, there's styles and styles. I personally do two kinds of styles. I run the systematic approach that I just told you, but I run also my discretionary trading, and there I really use my tape reading skills. So yeah, it's depend on the style on the style. Let's say that we have two
Yes.
or three strategies. When we make our entry, do you think that we can use things like double tops or low tops for all of them? What do you think about that, Jose?
Um, yes. There's ironically one of the best traders I've seen. He doesn't use fundamental. He doesn't use tape. It just the only pure market sentiment. So yes, 110% you can.
The audio missed a little bit, yeah, a little bit. So I'm gonna talk if.
Let's say not sure you can hear me still.
Yeah, now yes, it got out a bit, but now it's good, I think.
Yeah, I think it dropped off from the Wi-Fi. So
Nach- Nacho, will there be a recording for today's meeting? Yeah, I'm recording it. I have to figure out how do we upload that? Maybe private on our YouTube channel. I will figure out
yeah,
after this week ends. Okay.
yeah. Let's say we make our entries. Do you think we can use things like double tops, lower top, bottom? Uh, I don't know. Double top, lower top. I try not to. Yeah, my audio. I am known for having bad audio. But this is my logo and slogan.
My point of view, Shahram, sorry, I don't know how to say your name. My point of view is that rather than those kind of things, um, they are okay, but you have to like validate them through experience or through data. I think the most important thing here is to know the expected value of your decisions. Um, that's what I do for my trading. I like to know the expected value of everything that I'm making. Okay, guys, couple more questions, and we are going to be off today and on to tomorrow's webinar. That's gonna be like the same, but with for the ticker analysis tool. That is, it's being the
Yes,
second
sir.
the second tool of our tool set.
And by the way, we appreciate you guys asking questions. The more
Yeah,
questions you
we
ask,
love it. We love it.
generally, the more you learn, and it helps us improve or better what you guys are thinking, what you guys are looking at. And the only way to learn is to ask questions. And whatever questions you ask, very likely there's
Yeah.
5 other people that have the same question, but they keep out of for whatever reason they don't feel comfortable sharing.
And it also helped me improve my English. So thank you really much.
Your English is perfect, though. It's amazing.
No, it's not. Very good webinar. Thank you. Thank you, Fabri. Thank you. Thank you. Thank you, Palme.
How do you scale trade for gappers? Let's say if the average spike from open is 10% and your risk per strategy is 20%, do you jump onto the trade at the open or wait for above average? Rex that depends on your strategy. You could have a strategy that pushes off the open and you're shorting it. You could have a strategy that you're shorting the open and putting a 30% stop. And actually, you can measure that. So even in that aspect, I believe there's market cycle. So November has been very tough. If you short the open, so Rexpex, I don't know if you have a back test, but if you do, take a look at short the open and put a 25% stop or put a 20% stop. And you will see that it's been tough. But then when you go to that, what I showed you, there's also one you could see, like basically if shorting the open and putting a 25% stop, if it's been tough, that means in the next few days, it's the next month, it's gonna get better. By the way, Nacho, don't upload this. I'll make it private because people are gonna hate on us that I'm driving and
Okay.
uh,
Never figured out.
we'll talk about it.
Nacho is my cousin from Spain. Is visiting me for a few weeks in the US, so my Spanish is improving more. Yeah, man, I had you here in Spain. It was amazing, and I hope I can go to US and visit you as well. I will do it. I don't know when, but I have a pending travel to the US. Uh, Absolutely. You're a really, really good man, bro. I love to meet you.
Yeah, I love you too, Valhalla. You're an amazing human being, and you have a beautiful
Goku
Super
image.
Saiyan Goku image. So, how do you avoid PGHL? You can't, unfortunately. I think. Well, okay, you can in terms of if you avoid China stocks, low volume. So there's another stock, I think, by ticker is ZGYL. Whereas if you had like 1,000 shares, you would have been down like 500K. So, but generally, China names are the ones that do things like this. And once you have it,
It can happen
unfortunately,
everywhere.
people won't post. Say that again.
It can happen everywhere. For my opinion, is random. Like you have to be good at risk management, and that's all. You have to cover for these
But I
scenarios
don't think
like
you
this.
can risk manage it though. So what happened today? Like if you're short, it didn't open till after hours, and it went from like $20 to $210. That
What do you
10,000.
think about shorting on after hours? For me, it's banned.
No, no, no. If you so somebody was, did you look at the chart PGHL? It got
No.
halted at like 9:50, 10 o'clock or something, and it didn't open until after hours, and your
Oh,
account's blown up.
today. Okay.
Yeah, yeah.
I was not
PGHL.
looking at that. I was not looking at
I
that.
don't think you can avoid these things. It's just unfortunate. Yeah, PGHL. So if you're short, it get halts and then it opens up 1,000%. Whatever your position value is, 10x risk. Uh, so the other time that this has happened is ZGYL, and both of them are China. I think that's the common variable that's involved in it. There's these farms. They call them China farms. They have like 1,000 traders, and they just long, short, things like that. They make money, and then they blow up. So stuff like this. Yeah, this is the only way to avoid. Well, you have to have a daily max loss, but that wouldn't protect you. Maybe avoid China names. I don't know. Low volume, stay away. Low float, stay away.
For those of us who go for both the Flash Elite package, will we get the same discount next year? Yeah, we will do. Well, I don't know. I don't know. I won't say nothing because we don't know. Like there's something
Yeah,
we do on the way, on the go. So I cannot promise anything. I don't know if we will even do something like this again. For us, this like so low price. We don't know. I will let the
yeah,
question open.
I agree. We don't know, but genuinely, I don't think we've never given out 50%. 50% out of annual. That's a good deal.
Yeah.
Um, and especially with the scanner coming, what the scanner is, we
Oh,
haven't. We're
yeah.
probably gonna go into it. It's gonna help you eliminate trading random. So if you have a thing where you take setups without your setup showing up, you will now get alerts when your setup comes. So it will help you reduce. I'm being, but I try not to be. I think it's worth the money because if it helps you make makes you like $500, $1,000, and I think which it can. Um, it's worth the money. So
Look, guys, I've been watching Fernando's, that is the other partner, trade for months. Like we are discretionary traders, but Fernando for some like 5, 6, or 7 months, I don't know, something like that. He has been trading with Flash Research created strategies, like using the Flash Research tool. And since then, I think he's up somewhere around 60K or 70K, like a lot of money. And that's using a fucking tool that is worth like I don't know 1,000 and whatever a year. It's nothing. And yeah, it's worth it. We build a scanner day.
I think comes down to like
Sorry.
$8. I was gonna say with the discount, I think it comes down to as an $800 a year or something like that, or $900, and then you divide that by 12. It's like, eh. Trying not to be biased. Every time I go into salesy, I keep my mouth shut because I'm. But yeah. Any other questions you guys have? Feel free to ask. Not sure. I'm driving. Just a heads up, and there's some. If somebody asks questions, let me know, please.
Okay. Okay, guys. If you don't have any more questions, we are going to let's answer one more question. I think it's gonna be Rena's one, and then we're closing, and then to tomorrow's event. I hope you likes enjoyed this. I think it was pretty good. Muchas gracias, gents. Thank you, man. Thank you for you. And conviction typing. Like the mean, you are a good person, man. Thank you, man. Thank you really much. Thank you really much. I appreciate that a lot.
Yeah,
Okay,
Nacho is a very good person. I agree.
and you too, brother. So, brothers, we are going to close this event. Thank you, everyone, for assisting. And if you have any more questions, feel free to write down on the Discord chat, and we will answer you guys as we always do. And feel free to share ideas. Like if you're testing something and you need to ask for an opinion of someone, like feel free. This is a community. This is an amazing community where everyone helps and everyone is providing value. So that's it. Thank you for everything, guys, and thank you
Yeah,
for
thank you
your
guys.
intervention, Masood. That was amazing. Hands down, experienced trader like you and a good speaker. Thank you.
Thank you for doing this and putting work and effort into the PowerPoints. And also, I want to say thank you to you guys. Ever since we started doing these lives, it makes us as a team very happy that you guys are interacting with one another. There's a room, DTF, like strategy room. Strongly encourage you guys to go and keep participate and make friends. We're very lucky. You guys are lucky to have other people that are looking into the data about strategy and they're not just randomly guessing. Very, very good to accountability is a big part of being a good trader. So participate there. I encourage selfishly not to do DMs, but ask open questions and conversate open, talk about strategies, help each other, things like that. Whenever you give, things will come back. And long term, will come tenfold. So, uh, yeah, I hope you guys find some trading buddies and things like that. And I wish you guys the best. Thank you for your time, giving us your time to listen to us and use the product, giving us feedback. Appreciate you guys.
Thank you, brothers. Bye bye. Have a good afternoon.
Take care, amigos. Bye bye.